What's happening, everybody? It's your boy, Sean McLaughlin at Options Sean on the old Twitter X. Today is Wednesday, December 17, 2025. I got a red flag alert where I live. Do you know what a red flag alert is? If you live in hurricane zones, you might know what a red flag alert is. I live in the mountains. How the hell do you get a red flag alert? Well, they're expecting 85-mile-an-hour winds here today, maybe 100. They're already talking about shutting down the power in communities where I live to prevent forest fires. Whew, it's getting rowdy. So if for some reason I lose power or if I go dark during this show, it's because they cut power. I don't think that's going to happen. It's not getting all that windy yet, but it is starting. It is starting. I just took my dog out for a walk and it was getting a little breezy. All right, so hey, this is the What Are My Options show. This is a free-form show. There's no plan. There's no itinerary. It's open office hours. It's for you options traders who have questions about options and want to know, hey, what are my options? What do I need? What can I do here? So if you got a trade that you're thinking about putting on that you'd like some insight on, if you have a trade that you currently have on and you want some suggestions or ideas of how you might repair that position or roll it or be more aggressive with it, if you need help understanding certain option strategies, we can do that. We could also just look at some ideas, some trade ideas that you guys have. Um, we can do all of that. So I'm looking at my screen here. Gene, if you want to pull my screen up here, looking at the S&P 500 chart, I gotta say, I'm not liking the action in the broader market today. We're looking at the SPY. Let's pull up the Qs. Even worse picture in the Qs. Qs never did make a fresh high last week when the S&P was. That's a little concerning. What is VIX telling us? VIX is doing what VIX does, which isn't doing a whole lot of anything over the last couple of weeks. It's got a 17 handle. At least according to the VIX, there's nothing to be too alarmed about. What does the UVXY say? Same. UVXY isn't really saying much either. So we're left with, man, is the Santa Claus rally? I know. The Santa Claus rally does not technically happen yet. People get that wrong all the time. The true chartist, the true purist will tell you the Santa Claus rally starts right the day before Christmas or the day after Christmas into the new year. That's the true Santa Claus rally. But boy, it's like you'd like to see the market hold up here before that Santa Claus rally. Who knows? Who knows? Okay, so I see, I'm looking at the questions here. I see somebody, First Lady says, we got it in Denver half an hour ago. Oh, so you're in Denver and you're getting the wind? Okay, yeah, you're getting the wind. I live north of Denver. It's starting to come here, starting to come. All right, so I don't see any questions yet. So let's see, what can we talk about? What are some things that have been on my mind? I mean, we've talked about hedging. I feel like we've kind of beat the dead horse on hedging over the last month or so on this show. But to reiterate, I've been experimenting with selling SPX spreads. I mean, here we go. I could show you my SPX position right now if you're curious. Pull up the Analyze tab. Let's do this. Boom, boom. Nope. Hold on. What's today's? Today's the 17th. We got nothing on. So here's my SPX position that I'm short call spreads here. I'm kind of, in the middle of making money on this trade. These are options that expire tomorrow. All right. So like if I show you, well, some of them expire tomorrow. Let's open this up a little bit. Let's go maybe 50 wide. So I got an in the money spread here, which has a lot of work to do, but I got a bunch of out of the money spreads. They're out of the money now, thanks to the way the market has been moving the last few days. So pretty happy about that. Tomorrow, these options expire tomorrow. I'll likely cover these spreads, just book the gains. And any debits that I incurred in closing those, I will pay myself back with a new spread the next day to expiration. But yeah, this is how my position looks. And we've talked about this in the past. What I like about SPX credit spreads for an options portfolio, not for a long stock portfolio, but for an options portfolio, is that If the SPX or the S&P just kind of sits here and does nothing, that's, not helpful to my mostly long option portfolio. I'll have theta drag on my positions that are just kind of, eating away at me. But as you can see, my SPX spreads will pay me money, right? If we just sit here, this purple line is my P&L graph over a range of prices today. The blue line is my P&L graph over, or at expiration. So in this case, tomorrow's expiration. So if the S&P just sits here and does nothing, my profit on this position is going to go from about almost just shy of 1,700 to about 3,300. Nice, right? Without doing anything. So that's the nice thing about using short call credit spreads in the SPX to offset long options portfolios. Again, if you have a long stock portfolio, this might not be the best hedge. I mean, it'll be effective in a down market, but it won't make you big money. I'm not looking to make big money. I'm really just looking to make money when we go down a little bit and just sit still. All right. So let's see. I got some questions coming in. It looks like I see Michael Riley says, "Hey, Sean, question regarding risk management of options. I'm struggling with managing decisions to stop out of options. Use a percent loss of the option value or stop based on price of stock stopping below a point." Okay, so I think what you're asking here is, do I stop out of options based on the option value itself, or do I stop out based on a chart stop? Good question, Michael. And unfortunately, the answer is a little bit of both. Well, I shouldn't say a little bit of both. It's one or the other. Generally speaking, with options, I have a chart-based stop. So you know what? Let me bring up we'll bring up the All-Star Options portfolio positions right now. Let's go here. So we'll just, I'm cherry picking, but no, let's not do it for that one. We'll do Rio here. So here's the stock that I'm in. I've been long the March 75 calls. You can see this line here. This is my stop loss level 70. I'm actually going to be raising the stop here tomorrow when I do options jam session. But for now, my stop is 70. So for me, I'm looking at that chart-based level. All right. If the stock comes back below 70, that would be what stops me out. Okay. When a stop triggers in that manner, then I go into the option and or my position and I start working a limit order to exit my position. I try to put a limit order out somewhere midway between the bid and ask spread. Hopefully it's not too wide, that bid ask spread, but sometimes it is. But I'll put a limit order in somewhere in between and patiently work that order to get out at a fair price. That's generally how I will exit um, uh, option positions, at least in all-star options, right? Sometimes, and when I do this, I will write it out in my detailed report when I put the trade out. Sometimes I will use a stop loss based on the price of the option itself. So, for example, if I bought these March 75 calls and I paid 260 for them, which I did, I'll sometimes I might stop out if I lose 50%, right? So if I'm down 50%, whatever the chart's doing, I don't care. I'm running out of time, and theta is my enemy. I'm going to get out and cut the trade out. I don't do that all the time, Michael, and I don't really have a rule for when I choose one or the other. It's unfortunately it's more of a gut feel, right? I've been doing this for 27 years, and sometimes for me, there's a clear level on a chart that says, okay, we break here, we're out. Sometimes maybe the chart level isn't as clear, and you know, I'm worried more about the timing of my trade. I'm worried about the thing running out of time. And so, and that if that's the case, if the premium fades, I'll just sell it when I'm down 50%. Okay. I wish I could tell you there's, if A, I do B, and if X, I do Y. It's not that way. It's just more of a gut feel. But either way, you got to have at least one of those, preferably both, right? Perhaps both, but you have to have at least some plan to get out. And I always have a plan. Now, with some of my more aggressive options trades that I do, not in the all-star options portfolio, but just on my own, sometimes I'll have a time-based stop where, in fact, a lot of stuff I'm doing lately is at the end of the week on Fridays, I have like 50 open positions or something. At the end of the week, I'll just kind of look through my losing positions and anything that's down like $100 or more, I'll just close, right? But that's a more shorter term trading that I do. But really, maybe the answer, Michael, is there's no wrong answer here, but whatever you do, have a method and stick to it. All right. Don't change it midstream, right? If you go into a position and you're like, I'm going to close this position if it breaks this level, and that's it, right? But then later on, you change your mind. You're like, oh, I'm down 50%. It's the option. The chart's still working. The position, the stock is trending my direction, but I'm down 50% in the option. You know, you can get yourself in trouble by doing that, right? I just would encourage you to have a method, stick to it, be consistent. Okay. I hope that gives you a good answer, Michael. Okay. Robert says, if we are breaking down on a short-term basis, how do you prepare? Well, I've already prepared, Robert. I prepare with a plan on every trade I put on. I have a trade. I have a plan. The plan is I have a stop, right? And or I've sized my positions in a way that I'm comfortable taking the full maximum loss. I have defined risk positions. And for example, I mean, since we still have the Rio up on my screen, if I lose, if Rio goes to zero, that's okay. Because when I bought those calls at 260, I sized that position in a way that if I lost all my money in that trade, I'm not going to lose more than 1% of my portfolio on that trade. Now, look, if you have 20 trades on and they all lose 1% of your portfolio, that's a big hit, right? I get that. I get that. You have to know what you're doing ahead of time. All right. You have to have your plan ahead of time. And so for me, how do I manage drawdowns? I manage drawdowns by sticking to my plan, by honoring my stops where I have them and making sure that when I put my trades on, my positions are sized in a way that I'm okay with taking that loss. All right. It's happened many times, and it'll happen to you many times, especially as an options trader, where you'll have a portfolio of positions where a whole bunch of them will all lose at once, right? That happens, and that sucks. But that's part of the game, and you have to be prepared for it. All right, let's see what else. Is your strategy for this market still sideways strategies as per a few weeks back or different? Harminder, I'm a little confused, if I'm being perfectly honest, as when I was talking about the SPY and the Qs right now. I don't like this price action here. I have been of the mind over the last couple of weeks that we are going to rally into the end of the year. We still can, right? Nothing is really damaged yet, but I wish it would get going. So I don't feel like we're in for sideways. I think I still holding on to that we're going higher, but I reserve the right to be wrong. Christian wants to ask, can I talk a little bit about the process and the strategy behind my X subscription trades? So those trades are shorter term trades, right? They're high volume, high action. I'm doing shorter term trades that have anywhere from 30 to 60 days of expiration. All right. They're simple trades, just simple long calls, simple long puts, or simple vertical spread if it's too expensive. I don't want to risk more for my account. I don't want to risk more than 400 bucks per trade. That's number one. I'm not risking more than 400 bucks per trade. And these are trades that I'm going for home runs, right? And there's going to be volatility. There's going to be volatility. That's the name of the game. I'm trading these trades in an account that I can afford to lose that money. I don't want to lose that money. I definitely don't want to lose that money, but I can afford to lose it if that were to happen. All right. The name of that game is I'm going to take a lot of losers, but I'm going to have a handful of big winners, and the big winners more than make up for the losers when they happen. And they come in chunks, right? I mean, we had I started doing this in August, right? August we had a profitable month, made a little bit of money. September we had a profitable month, made a little bit of money. October we absolutely killed it, right? Made 40 grand on that account. Great, right? That's not going to be normal, and that should not be the expectation. But again, that speaks to the nature of options, right? When you're long premium, you have defined risk. You're going to have lots of small losses, but when you get one right and when you hold on to a winner, they're going to be big. So you're going to have trades that are big winners, a handful of those against a lot of small losers, and you're going to have months that are big winners against a bunch of smaller losing months. That's just the way it is. So it's a shorter term strategy. It's something I do with one of my accounts, and I've been doing it for a while. but I just decided that, a bunch of people that know me have asked, like, hey, I hear about you doing these other trades, and where can I find information on those? And I was doing it on my own. I said, all right, well, why don't I start putting them out there on Twitter for anybody who wants them? And there you go. And I don't tell people that you should take all these trades. You can. I'm doing all the trades. I'm not saying you should do them. I'm just saying I'm doing the whole point of it really is just to be a steady stream of options idea flow, right? I'll put out a trade. You could look at it. If you like it, great, do it. If you don't, skip it. That's cool too, right? That's cool too. But I also would caution you, you may have a different risk management plan than I do. I'm a little bit more cavalier with my risk. I'm giving things a little bit of room, right? I'm basically trimming losers on Fridays is kind of my plan. And I know that, I could potentially lose everything in an option if it goes against me quickly. And we have seen that certainly. But my risk is defined, right? My risk is defined to what I paid. Um, I don't know. I don't know if that answers your question, Chris, but or Christian. But that's what I got going on. That's on my Twitter feed or my X feed if you're interested in that. Okay, First Lady says, Sean, what do you use to determine your stop loss when long? ATR? Thanks. No, I don't use ATR. Nothing wrong with using ATR. In fact, ATR, which stands for average true range, for those of you who don't know, um, a lot of people use ATR for stop losses, and some people use different levels. But a common stop loss is for swing traders is maybe a 2 ATR. So if the average true range of a stock is say $1 per day, then you multiply it by two, and two is your stop loss from where you entered, or maybe a trailing stop loss, right? Nothing wrong with that. In fact, I like that a lot. In fact, when I used to run a commodities hedge fund back in the early 2000s, uh, I used ATR based stops for my futures positions, and it worked great, right? I like that. But for the options trades that I do here with All Star Options, I my stops are based on chart levels. Right, I'm looking for obvious levels of support or resistance. So when I pull up a chart like Unity Software, for example, this is a position that is not working for me so far. But I got a level here at 43.50. This level was support previous to my breakout that I bought that looks like it's failing. It also corresponds with a previous high that happened here in early November. So to me, that feels like a significant level. Is that the right level? I don't know. Nobody ever knows, right? All we can do is do the best we can. But I'm looking at chart-based levels. So let's do a Cisco here. Cisco is a position I'm in. It's kind of been going sideways. I thought we had a breakout, it's rolling over, but 75 is like right below this kind of high island that we have since this earnings breakout. So I look at that chart and say 75. I don't want this thing to get below 75. That would be bad. That would be a bearish development for my bullish trade. So First Lady, I'm using chart-based stops primarily. I mentioned earlier, sometimes in my option positions, I'll get out based on a percentage of the option loss. But no, primarily charts, right? And charts allow me, by the way, using a chart-based stop allows me to stick with trades based on the trend, based on facts, right? The fact is, Cisco hasn't broken 75. So as far as I'm concerned, this is still bullish. It doesn't look bullish over the last 5 or 6 days, right? That looks pretty shitty. But if you zoom out in the grand scheme of things, coming off these April 7 lows, I mean, the trend is still higher until proven otherwise. We're still above the 50-period moving average. We're still above the VWAP. That is still bullish in my book. All right. Let's pull up another one here. We just got into, well, Nvidia's a bad. I mean, a lot of these look like bad examples. They're all kind of pulling back over the last few days. J&J, here's another one. This has been a good trade for me. My stop is at 194. I'm going to be moving this up here tomorrow to about 199. I'm just, watching where support develops, right? When we have a fresh new breakout like we did this week at J&J, where was the last level of support? The last level of support was right around here, 200. So this 194 stop is going to move up to right around the 199, 200. All right. That's how I do my stops. All right. I think I've answered every question that we have in the chat. If we don't have any more questions, we could end it early. Yeah, I didn't have anything super prepared to talk to you guys about today, actually. Being prepared would be the antithesis of what I'm trying to do here. I'm trying to go with the flow. I'm an improviser. I'm an improviser by nature. I don't know if you guys know this, but those of you who are live in Colorado or maybe come through Colorado sometime, I perform with an improv comedy troupe. We perform about every 6 weeks or so up in Longmont, Colorado. If you ever want to come out and see a improv comedy, I got a great group. We got a great group. There's four others in the group. There's five of us total, four others. They are some of the funniest people I've ever known. Funny that you'll know too. Come on out. So I like to improv. It's first last, not first lady. I apologize. Oh, I apologize. My old man eyes are failing me. I apologize. First last. You're in Colorado. Come up and see my show sometime. I hope you're coming to my trader meetups. Are you coming to my trader meetups? You know what? Let me do this real quick. I'm going to pull this up. Brother Bill, my man, how are you? Um, Let me do this. If you guys happen to be in Colorado, if you don't know, I run a traders meetup group. We get together on average twice a month. We get together in downtown Denver or near downtown Denver, and we can also get together in Boulder. We kind of alternate back and forth. So if you're in Colorado or if you're passing through or if you're coming here to ski this winter, I know a lot of you are skiers. Let me know. Give me a heads up, and I'll make sure that we can coordinate our schedules. We have a trader meetup happening when you're here. And if you live here, like you, first last, I hope you're coming to my trader meetups. I just put the link there in the chat. If you guys want to check into that, and if you're local, please join us and come hang out. They're totally free. They're totally fun. We get a good group of traders. We get anywhere between 15 and 25 people showing up at every meeting. And we have a wide variety of traders. We have people who are super experienced, been doing this a long time, like me. We also have people who are very new, brand new, some who haven't even put on a trade yet, but they're curious, right? We got guys, we got girls, we got old, we got young, we got everything. We got all types of traders. We got futures traders, crypto traders, stock traders, options traders, everything. We all speak a common language, and that is the language of markets, the language of risk. And we'd love to have you come hang out. And a term of condition, I see it. Tell us a joke. So improv comedy is not about telling jokes. I get this. People get confused all the time. It's not about telling jokes. Funny in improv happens in the awkward pauses and the awkward facial expressions that happen when something happens that you weren't prepared for. That's where the funny happens. All right. So a little inside baseball. Harmander says, if ASC, if All Star Charts ever comes to Europe, I'm there. Hey, I'd be the first to sign up to go to Europe if we can go to Europe. I'm in. I've never been to Europe. Never. I'd love to go. I would love to go. Let's see. All right. So Robert's got fam in Denver. Hopefully you'll come up sometime, huh? Awesome. And Tim or Tintinette, brother and sister live in Breckenridge and Edwards. All right. Come on through, man. Come on through. All right. Well, it seems we've run out of options questions. So we're going to cut it short. We can do that. We're not on a schedule here. We don't have a time slot to fill. Sometimes we go 15 minutes. Sometimes we go 45. We've gone as long as an hour before. I know that stresses out my producer, though, when we go an hour because there's another show right after mine. But hey, let's put a pin in it. Let's call it a day. Let's call it a week. I'll be back tomorrow, though, with the options jam session at 3 p.m. Eastern, where we will go into depth on some of these positions we've got open in the all-star options portfolio. We'll update stops. We'll review positions we've exited over the past week, whether for a win or for a loss, or if we've adjusted any positions. We'll review all of that. So tune in tomorrow at 3 Eastern, 12 Pacific, for those of you on the West Coast, on the left coast. All right, everybody, have a great day. I'll talk to you again tomorrow. Be well. Take care.